YouTubers, Mike Martins here with the Mike Martins channel. Bank of Canada cuts rates by half a percentage point to 1.25% amid the CV concerns. What the heck is going on? So, what are they doing? Well, Canada's economy is basically backed by real estate. A majority of it is, and manufacturing and manufacturing homes for wealthy investors. And no builders building homes for nonprofit, or like very little to no builders are building for low income. They're making it, it's a big monopoly for Canada. And now with them having to lower rates, they're starting to feel the pinch. And then when they got to get locals to buy into the markets, they're doing these first-time homebuyer loans. They're doing all kinds of weird stuff. Guys, don't forget to get to the channel and actually click on reminder for trends in the housing market for tonight at 7 p.m. The Bank of Canada cut its trend-setting interest rate by half a percentage point to 1.25%, down from 1.75% on Wednesday in an effort to soften some economic impact of COVID outbreak. The decision comes as the U.S. Federal Reserve implemented a similar cut on Tuesday, acting before its next scheduled policy meeting on March 17 and 18. Wow. So they're doing it ahead of time. Wow, Canada's economy has been operating close to potential with inflation on target. The COVID is a material negative shock to the Canadian and global outlooks, and monetary and fiscal authorities are responding, the central bank said in a statement. While the traders and analysts had widely anticipated that Canada's central bank would follow the U.S. lead, it's unclear to what extent the rate cut will shore up sentiment among investors, markets, and consumers. Basically, deflate the currency. The lower you lower rates, the more you deflate the country's value of its currency. It doesn't look attractive for investor. It looks attractive, I guess, if you're coming to buy real estate. And that's all we do is Canada, Australia, and the UK and New Zealand are just real estate hungry countries, competing for rich investors to basically buy us completely right out, right? The Fed surprise cut failed to trigger an immediate rebound in the stock market, with some analysis speculating that the emergency move might have further spooked investors. Some economists also questioning whether lower borrowing costs are the best antidote to the economic alignments brought on by CV. Monetary policy generally not highly effective in resolving supply side shocks, TD Economist wrote in a report on Monday. Fiscal policy, on the other hand, is effective when targeted at the source of the supply shock, she added. Governments around the world are weighing spending measures aimed at blunting the effect of the health emergency. Well, Canada, I mean, people are getting armed with flyers at the airport or pamphlets. There's nothing happening. So I think Canada's playing off like, hey, don't worry, it's all good. That's what they're doing. So I'm just telling you what's happening. I mean, I'm not making this up. On Tuesday, the United States, Japan, Germany, and Britain, France, and Italy, and Canada gathered as the G7 group of a major world economy said in the joint statement they are ready to take actions, including physical measures where appropriate, to aid in the response of the virus and support the economy. On Wednesday, the World Bank said it is making $12 billion available to provide immediate support to low-income countries dealing with the health and economic impacts of CV. But you're going to have to pay the bank back with VIG. Remember, you got VIG on that money. Still, if quarantine spur a fear-based reaction among households, then monetary policy needs to step in addition to fiscal policy, Buddy wrote. Woo! So inject more money in the system. Keep deflating the currency. And when people start losing, I guess, they start losing confidence in their governments and banks, you can't withdraw your money. They're going to put a limit on how much you're allowed to withdraw. The banks will go on a holiday. And not only that, on top of that, and on top of that, and on top of that, they're just going to go cashless. That's just what I think is going to happen, right? What do I know, right? The bank said it took action because of COVID. has cut business activity in some regions and disrupted supply chains, hurting both commodity prices and the Canadian dollar. Global markets are reacting to the spread of the virus by repricing risk across across a broad set of assets, making the financial conditions less accommodative. The bank said, it's likely that as the virus spreads, businesses and consumer confidence will deteriorate further, depressing activity. I just said consumer confidence to go down. Analysts also worry about the lower borrowing costs might due to a residential real estate sector that seems already poised for a hot spring market in some of Canada's priciest cities. Hot spring market! So, guys, here it is, guys. Now, let me get to the point of this article, because this is a damn long article. Where it goes from here is a matter of epidemiology rather than economics. We're at a point right now, a precedence right now, where we have not left our economies on autopilot. We've been finding ways to prop them. We've been finding ways to rig them. We've been finding ways to keep things rolling in a way that we shouldn't have them rolling. And countries bidding on wealthy investors or wealthy people to come in and buy us out has made this problem. Now that the locals can't get into their own housing market, it's becoming a huge problem. And they're going to have to lower rates even further because it's way out of reach for the average person. What's it going to do? It's just going to make the black swan come in a bit earlier than usual amid all these problems. Lowering rates, again, is temporary, and you're going to see a little bit of a movement in the housing market, especially because housing is an important factor in our GDP. But if we had higher interest rates, then this way, if we had production exporting, then our exports would be booming. If we had higher interest rates, we look more attractive and stuff, and it looks like a more thriving economy if we had higher interest rates, and it looks like more of a country you'd want to do business with that's not in the pits or in the dumps. Let me know what you guys think. What do I know, right? It shows that the currency has higher interest rates, shows the currency has strength. It shows a lot of things. Let me know what you guys think. Comment below. Thanks for watching.